Yeah, I think the improved performance is mostly due to the right levels of capital and liquidity. So the capital has kind of followed the performance, right? So in the 90s, you saw a lot of great performance, and then the capital came into the industry in the 2000s. Then there's too much capital, not enough liquidity. The performance really went down. And so then the capital fell, right? Fund sizes are getting smaller. Companies need less money to get started, and then you can get some earlier validation from revenues. And so I think then the fund sizes are the right size, and then the funds are owning enough of these companies that then when they go public, they have a pretty meaningful impact on these fund sizes. So I think that's why you're seeing the performance go up. And especially on an IRR standpoint, which is what a lot of the Cambridge and industry benchmarks are off of, it's the faster time to liquidity that really helps. Yeah, I think the technology evolution is really because it's on the cloud and because the world is such a global industry now for venture, is that you can see some of these companies, again, get started with less money and go viral much faster. So it doesn't really matter where you start a company now, because your customers, if it's a consumer product or a website, your customers can be anywhere in the world. And so that's been a fundamental shift and has changed a little bit our investment strategy to think not where the company's being started, but where the business and where the market is focused. On the enterprise side, I think one of the big shifts we're seeing is with security. You see all these security breaches with large companies, and so the security industry in general is just skyrocketing. Yeah, I think with the tech-enabled healthcare is an important industry because the consumer, the individual, wants data now, just across industries. We want it now, we want to be able to store it, we want to be able to see it, we want to be able to share it. And so when you take that in the healthcare industry, it's how do I share my medical records with my multiple doctors? How do I keep my medical records historically? How do I get more information on a disease or something like that? So I think it's really data-driven, and the need to have your information with you and own your information. And so that we're seeing a big crossover using the cloud, using the mobile device more on the healthcare side, which is really driven by trends in the technology space. Absolutely. The tech companies like Google and Facebook and Oracle and even the big pharmaceutical companies have a lot of cash on their balance sheets. Part of that, I think, is due to the public markets doing very well. So they're looking to acquire companies. And the valuations are getting bigger, like WhatsApp at 19 billion, right? Part of that is a defensive move, eliminating perceived competition. Now, in my view, that doesn't justify a $19 billion valuation. But if you look at the cost of acquiring a customer and you add all of that up, how many customers they have, what's the cost of that, then what's the cost of eliminating some competition? Is it better for a tech company to wait and watch a company like WhatsApp develop before they go acquire it, or is it better for them to start a business internally? And so I think we're going to see a lot more exits through the M&A that are going to be high valuations, because I think these companies are all growing in the private markets. Crowdfunding is definitely playing a big role. There's two angles of it. One is groups like AngelList that are allowing these companies these very early startups to post their idea and get some venture-backed or angel-backed crowdfunding, so to speak, as opposed to raising a proper round. But then there's also companies that don't even go to the venture capital community. And they're through Indiegogo or some of those, they're raising money through friends and family. And I think that's what's new in the last couple of years. There's always been an angel market, but it's this friends and family market that it'll allow some of these companies to get a little bit of validation before they go raise a proper round, which I think will help. It'll weed out some of them that thought they had a great idea, there's no customer adoption, there's no market for it. We don't see a threat from the VCs of the friends and family type rounds. There is a threat for the VCs from angel type rounds.